Hey guys, Tatiani Favors here, your tax business coach. And today we are going to discuss bank products. Yes, because check this out, guys. It's so crazy how many tax professionals use bank products, but don't actually know what they are or how they work. So in this video, we're going to explore the world of a bank or of a product that you already offer, but probably don't really understand. So let's get to it. So before we really get into exactly what a bank product is, I'm going to take you on a journey of the entire preparation process in the taxation industry. Because when someone gets their taxes prepared, they either have a liability, which means they owe, or they have a refund, which is typically an overpayment of taxes or a qualification of certain credits and deductions granted for certain tax circumstances. Okay. And so the taxpayer has a few ways to receive their tax refund. And so they're broken down into two main options: free option and a paid option. So let's dig deeper, okay? So your free option is provided by the IRS. It's either direct deposit or mailed check, and you will receive your refund in between 21 and 28 days. Okay. The thing about the free option, however, is that the taxpayer has to actually pay your tax preparation fee out of their pocket. Okay. So let's look at a visual of what this looks like. So you prepare someone's tax return and the calculated tax refund is $5,000. Your preparation fee is $500. The refund that the IRS will provide to your client either via mail check or direct deposit is $5,000. The refund they receive equals the calculated refund. Why? Because they have to pay you $500 out of their own pocket, whether it's cash out, whether it's fulfilling an invoice that you give them, whether it's cash, they have to pay that fee from their funds. Okay. So that is the free example. Let's go back to this slide so we can talk about the paid. So the paid is where the bank product comes in at. Okay. Now the bank products are a suite of options, are a suite of products. That's what's called bank products with an S plural. And it's made up of either a refund transfer or a refund anticipation loan, aka a bank advance. We'll get into the difference between the bank products in 1 second. This is just a high level view of the difference between the paid option and the free option of how your tax payers of how your tax clients can receive their refund. Okay. Also, when someone applies for a bank product and is approved, they normally receive their refund in less time. Now, as a tax professional, we're not supposed to tell the client that they'll receive it in less time. We're just supposed to present rather the facts to them. Hey, here's a free version where you have to pay out of pocket, but there's another option that you can receive and that we will take your tax prep fee out of your refund and you'll receive the remaining. Okay. So when someone uses a bank product, they don't have to pay you out of pocket, okay, for their tax prep fee. It will be taken out of their refund, okay? Also, though, the reason why this is a paid option is because not only is your fee taking out of their refund, the bank has a fee, the software company has a fee, okay? So that's what they're paying for. They have to pay for that convenience. So let's look at a visual of what that is, what that looks like. This is a paid, for example. So taking the same amount of the calculated tax refund is $5,000. Your prep fee is the same at 500, but then the bank fee is 39.95, and then the software fee is 29.95. And so the refund that they will receive is 44.30.10, okay? Because what happens is everyone who has a fee will take their fee from that taxpayer's tax refund. Okay. So when they receive their refund, they'll receive in total 44.30 and 10 cents. They can receive this either via direct deposit or via a lot of banks have a prepaid card They can even receive it via check. There are different options that they can receive this refund, okay? But I just want to give you the visual on how this works. Now, in order to utilize a bank product, a taxpayer has to have a refund. And the refund has to be large enough for all of the fees to be taken out of. If they have a liability, of course, they'll be paying you for your tax um, prep services out of their pocket. Okay. If they have a big enough refund, though, it's convenient because they don't have to pay out of their pocket. They can just reduce their refund by that amount. So that means that bank products are, like I said, convenient, and they can speed up the process, speed up your client of getting actual money in their account. Okay, they can have money in their account super quick, and it's more convenient because, like I said, they don't have to pay you for your services. They can just get it reduced from an amount of money that they don't have yet. Okay. That is what is appealing. And because this is America, we pay for convenience. So that's why bank products are the paid option. Okay. So let's dig deep into the different types of bank products. Like I said, we have refund transfers and then the refund anticipation loan. Now, the refund transfers, again, they're normally received in less than between 21 and 28 days. The taxpayer will not necessarily won't receive their refund faster than direct deposit. Yeah, for refund transfer, they don't. This is not a loan. Okay. The refund transfer is not a loan, but there's still a cost to the taxpayer. Why? Because you have the convenience of reducing the refund by your tax prep fee. So they are not paying out of pocket. Okay. A lot of people, so in layman's terms, a refund transfer is simply the process of reducing a client's refund by your tax preparation fee. Okay. And when you do that, the bank ends up paying you your fee. So it solidifies your fee, but someone else is collecting your money. Okay. It's convenient to your client because they don't have to pay out of pocket for your services. It's easier to just reduce their refund by your fee. Okay. That's one option. The second option are loan options. Okay. There are loan options, and their refund is usually received in less than 21 days, way less than 21 days. And what happens is, like I said, the refund transfer is just simply the process of taking your fee out of their refund. The loan options are um are the process of not only reducing their refund by your fee and the other fees like the visual showed you, but it's giving them the money before the IRS has the time, before the IRS starts to fund returns. Okay. And so what that means is, and we can go to this slide so you can understand exactly what I'm referring to. The IRS does not start funding tax returns until after February 14th. So February 15th is when the IRS starts to fund tax returns. That means funding tax returns, meaning they start to distribute refunds, but they start to do that because of the PATH Act. Okay. They for those tax returns, for certain tax returns that claim the additional child tax credit or the earned income tax credit, then they will start funding those returns at February 15th. Why do they do this? Because the additional time helps the IRS stop fraudulent returns from being issued, and identity thieves and fraudulent claims to be fabricated. Okay. They're trying to stop fraud. Okay. So they have enacted, and it's only been a few years since the PATH Act has been in existence, that they're trying to reduce the fraud with people claiming these types of credits. So they don't fund these returns until February 15th. But of course, you all see people getting their tax refunds in January and early February. How does this happen? That is because of the refund banks. There are something called the refund banks whose sole mission in the taxation industry is to loan out people's advances before the IRS actually starts to fund, so people can get their money that much quicker. But what a lot of tax professionals do not understand is that the bank advances, they're actually a loan. Okay. There is just not free money, it's a loan. And the tax return is the collateral for the loan. Okay. So it's very important that that the tax returns are prepared correctly, because that bank loan is dependent upon that return getting funded by the IRS. Okay, I just wanted to explain that to you all. So, okay, February 15th, the IRS starts the funds tax returns, but the bank products will allow one to get a percentage or all of their refund up front. Okay. The end of the end of January, okay, is when tax season officially begins. That means that the IRS acknowledges the tax returns. What acknowledges means is people can now e-file tax returns to the IRS, and they will be in the pool of IRS to check and to confirm and to approve said refunds, liabilities, things of that nature. Okay. That typically begins at the end of January. This year, it is the 29th, but each year it's slightly different day, but it's usually always after MLK Jr. holiday. Okay, that's when the IRS officially begins to acknowledge tax returns. Okay, but January 2nd through the end of January, okay, is the pre-acknowledgement phase, okay, or time frame. And the aka pre-acts, okay, pre-acts is short for pre-acknowledgements, and these are tax returns that have not been acknowledged by the IRS yet, because as you can see, the IRS doesn't begin to acknowledge tax returns until the end of January. They are pre-acts, but the banks will still um, provide a bank advance, aka a loan, to a taxpayer based upon the tax return. Okay, based upon the tax return. And so when they do that, and this happens between January 2nd and the end of January, now you can see the competition and the convenience that the banks have, excuse me, with offering bank products, because people are able to get their refunds much quicker. If it weren't for bank products, people would have to wait until the end of January or even after February 15th in order to receive some type of funds from their taxes. Okay. I really want to paint this picture for you all so you can understand the importance of bank products, why they even exist, and also what gap they were filling within this industry. Okay, the banks came in and they're called refund banks, but the banks come in and they say, hey, this was a gap in the taxation industry. Let's try to get people money quicker. And because we're putting money in people's pockets quicker, we're going to charge a fee. We're going to charge a fee for the speed, and we're going to charge a fee for the convenience. Okay. So y'all understand that? Okay, great. Here are the main refund banks. You have Refund Advantage, you have Santa Barbara, you have Republic, and you have Refundo. These are not the only refund banks. These are just the top four refund banks, okay? Because you can, excuse me, you can research these. You can see which one you want to go to or whatnot. But here are the refund banks, okay? Um, let's go back. I want to make sure y'all understand the difference between refund transfers and loan options. Again, refund transfers is simply the process of reducing your tax, giving your tax clients the convenience of not having to come out of pocket to pay for their tax return. Okay. And it's simply that, simply reducing their refund by your tax preparation fee. Just that. The loan option, the refund anticipation loans, bank advances, things of that nature, is actually a loan that your taxpayer will receive. They'll either receive a percentage of their refund or their entire refund up front. They actually have to apply and get approved for this. Okay. And the reason why I don't have a specific name up here and it's just loan options is because the different banks call their loan options different names. So for example, Santa Barbara, aka TPG, they call their loan program Fast Cash Advance. Okay. Republic calls their loan program Easy Advance. Okay, so each bank, let's go back to the banks, each bank has different names for their loan program. Okay, so let's go ahead and get into little known EFIN facts. I want to get into the difference between a first year EFIN holder and a non first year EFIN holder. Now, many new tax professionals don't know that once you receive your EFIN, offering the loan of that bank products to your clients is not always an option. Okay. The refund banks, like I told when I explained it to you earlier, the refund banks uses the tax returns as collateral. Okay. Because what happens is once the IRS actually starts funding the tax returns, that's how the refund banks recoup their money. They loan it out to your clients. Okay, in the hopes of recouping their money once the IRS starts to fund returns. So in the event that they have extended you a bank advance and for some reason, let's say the tax return was improperly prepared, instead of having a 5,000 refund, you actually only have a 3,000 refund because you may have overstated something. Okay. Then the bank now does not recoup their money that they loaned out. Now they go and try to get that money from your client, which makes you look bad because to the clients, they don't know the difference between the bank and the preparer and the software company. They would just look at you crazy. Okay. So it's very important for you, A, to make sure that all of the tax returns that you're filing are accurate, but B, understand why first year EFIN holders typically are not approved to offer the loan aspect of bank products. Now they can offer refund transfers all day, every day, because again, those aren't loans. That's just the process of reducing the refund by your tax prep fee. Okay, but the loan is too risky for these banks to issue out first year EFIN holders the ability to give loans because they don't know you yet. Your EFIN doesn't have any history yet. Okay, and when I say history, when you have an EFIN, okay, when you have an EFIN, and it's the electronic filing identification number, an EFIN identifies a company or an individual as a participant in the e-filer program with the IRS, meaning that you can directly transmit tax returns from your computer directly to the IRS and state authorities. You don't have to go through anyone else, right? The EFIN really gives a person the independence that they want with their tax firm. Okay, just in case someone didn't know what EFIN is. They don't know your history. And by history, meaning when you get an EFIN and you start filing tax returns, you create what's called a ratio. So not only how many tax returns did you file, but how many were approved, how many were rejected. And depending upon what that ratio is, it really tells the refund banks if they can trust you or not, depending upon if you've had a lot of returns rejected or not. If you have a lot of returns rejected, that tells them that there might be something fraud happening, or we can't rely on this tax professional because if we loan their clients some money, that tax return might get rejected by the IRS and we won't get our money back. So that's not a good look. Okay. So that's why they typically want an EFIN to have some history so they can kind of gauge on the riskiness of allowing you to issue out loans to your clients. Y'all picking up what I'm putting down. Okay. So what happened is, and so what's the solution to this? And I'll tell you like this, everyone isn't cut out for this solution, but honestly, this is what I did back in the day. I had to put a tax season in the hole, okay, quote unquote, in the hole. Y'all know when you start a new job and they say you have to put 1 week in the hole before you get paid. Well, it's a similar situation. You use your first year building up your EFIN, and then the following year, you'll be able to offer the loan option of the bank products. Okay. And so, again, that's how you build up your EFIN. And that's how you stand on your own, be 100% independent in your tax firm. It's building up your own EFIN, offering your own bank products. Okay. Once you have that, then you'll be able to offer bank products. The requirements are typically you have to file about 100 tax returns with a percentage of 90%. Okay. A 90% acceptance rate and about 100 tax returns. Each refund bank has their own requirements, but as an average, that's about standard, those steps. Okay. Also, let's talk about the refund banks versus software because all refund banks don't partner with all tax software. So before you choose a tax software, it's important to see what your refund bank options are and inquire if said bank will allow first year EFIN holders to offer the loan aspect of bank products. You can actually call up during the off season, you can call up these banks and say, hey, do you allow first year EFIN holders to offer the bank advances, the loan? Okay. Don't just say bank products because the representative will probably say yes, because you can offer the refund transfer, which is not a loan, but you want to know if you can offer as a first time EFIN holder the loan aspect of the bank products. Okay. That's what you want to do. Make sure that you ask specifically about the loan. And like I said, if you go to a specific bank, know what they call their loans. So if you go to Republic, know that they call their loans easy advance. Okay. So ask if they allow first year EFIN holders to offer the easy advance. You get what I'm saying? Like really make sure that you understand what they're saying. If you find a bank that will allow first year EFIN holders to offer the loan aspect, then get a list of the softwares that they partner with. Because, like I said, every bank does not partner with every software. So you might get a software that doesn't partner with the bank that actually allows first year EFIN holders to offer the loan advance. Okay. So do that research before you put down any money and all of that. Okay. Now, let's talk about tax clients versus bank products because listen, guys, to be honest, bank products aren't for everyone. Okay. And its usage highly depends on your clientele, on your target market. For example, my clientele, my target market, they don't know what bank products are. They don't ask for them. They never heard of bank products because they're business owners. Okay. They are not checking for anyone's bank products. Okay. A specific target market that wants bank advances and the convenience of not coming out of pocket to pay for tax prep services are a specific niche of people. Okay. So the people that want bank products, that's a certain target market. That's a certain niche of people. Okay. That's not all taxpayers though. So, but I do agree that no matter what your target market is, you should have bank products. You should be able to offer bank products solely to be competitive, okay? Because you don't want, even if the majority of your target market don't use bank products, you should still have the ability to offer that so you don't leave any money on the table. Okay. And so you can have a different offer to your clients for convenience. Okay. So now that you all know about bank products, what they are, how to use them, what the source is, what the gap in the taxation industry that they feel. No matter which refund bank you decide to go with, you must take a compliance exam. Okay. You have to take and pass a compliance exam, and then that particular bank will provide you the guidelines for their program. Okay. And that is how you get approved to offer bank products. Okay, guys? So I hope y'all took some notes, some pictures. You have a better understanding of bank products because they are important to this industry. They are important to your business to give you the competitive edge, whether the bulk of your target market uses them or not. And share this information, guys. Okay. I'll see you in the next video. Happy tax season.